All right. Well, hello, Facebook. Brandon Roberts is that. No, he's that guy. And I'm Brantley Whitley with the Insurance Pro blog. We're still working out the kinks with this whole Facebook Live thing. So hopefully you'll bear with us on that.
Everyone is learning today why you were never a weatherman.
I have no sense of direction. The green screen or blue screen or whatever would just totally baffle me. So day 2 of our live broadcasts, and we are going to talk again about whole life insurance. We talked about whole life insurance yesterday, right? Yes, we did. We talked about dividend options. And so today we are going to talk about one of the other sort of, I guess you call it frequently asked question, Brandon. Would you not?
Sure.
One of the things one of the, I guess, strikes against whole life insurance that critics have, and you see some in the financial press, and we get it manifested in the form of questions, isn't whole life really rigid? And I mean, I got to surrender the policy if I want all the money, and I don't really understand how that works, and that's a little bit scary. So we're going to give you a little bit of context for that today, or Brandon's going to give you a little bit of context. He's got a few things that he wants to talk to you about. But first, I should mention, if you really like what we're doing here, then you're going to love our book, Predictable Profits, which, let's see, Brandon requested that I do it this way. Oh, yeah, I'm doing it.
Yeah, so, see that book.
Wilson from Home Improvement. Yeah. If you go over to ipblive.com, that's Insurance Pro Blog, live.com, you can read all about it, find out everything you ever wanted to know about Predictable Profits, which we aptly titled gave the subtitle, the 5 reasons your clients actually want to buy whole life. So with that said, I will stop the shameless promotion section or this portion of the shameless promotion section from our Facebook Live, and I'm going to kick it over to Brandon to talk to you about what your options are with the whole life policy that you don't want to pay for anymore.
So today we're going to talk about how you can stop paying premiums on a whole life insurance policy without losing the whole life insurance policy, correct?
Right, exactly.
We are
throwing that in there. That probably would have been helpful.
Hey, we want to bring this up because a lot of people, I think, do not realize that when they have a whole life insurance policy, especially one that they've had for a little while, there are options that they have at their disposal to stop paying the premium, and they don't have to cancel the policy at that point. That could be an option to suspend payments for a little while, or it could be an option to suspend payments forever if they wanted to. We generally look at it as 4 different options, and that is an offset, a dividend, or the use of dividends to pay premiums, a premium loan, or the reduced paid up option on whole life insurance.
Okay.
So I want to run down those 4 options so that everybody kind of understands what they are, what they'll do for somebody, how they function, and what their consequences are.
Okay.
So we mentioned the offset first. That's an insurance term that we use that simply means we're going to take some cash value inside the policy and we're going to use it to pay the premium that's due. So in that case, we're withdrawing that cash effectively and paying premiums with it. The dividend option is a function of telling the insurance company, hey, whatever my current dividend option is, probably paid up additions if you watched yesterday's show.
Right.
I want to change that now, and I want to change it to the option to pay the premium. Right. Now, there are a couple of things that you need to know about that option. First, it's only available if you are receiving a dividend that equals or is in excess of the premium that's due.
Right.
So if your premium's $10,000 and the dividend
for some policies, right? Yeah.
Your premium's $10,000, you got a $5,000 dividend, it's not going to work.
Right.
But provided the dividend is larger than or equal to the premium that is due, you can do this.
Right.
The premium loan is kind of like the offset, only we're using a loan, so we're not withdrawing cash to cover the premium that's due.
Right.
And in a lot of circumstances, this is actually an option that defaults on whole life policies when the policyholder doesn't pay the premium.
Right.
I want to throw a little warning out for for everybody that it used to be kind of the default that everything just automatically checked to within insurance companies. In the past couple of years, that policy's kind of changed, and it defaults to, no, we're not going to do that unless we're specifically told that that's what the policyholder wants to do when they apply for life insurance. So just be aware.
You're talking about the automatic premium loan.
Yes. So just be aware that when you apply for life insurance, or when you're taking care of the application process for life insurance, that you should probably check the yes box for automatic premium loan, just in case the premium doesn't get paid on time.
Yeah, we actually had a circumstance a couple of years back where it had not been, was not a policy that we had sold to anyone, but it was a policy they bought from someone else, and for whatever reason, that option was not checked, and so the policy did not APL or go into the automatic premium loan.
Correct. The last one is the reduced paid up option, and the easiest way to understand the reduced paid up option is to simply know that it is a method of taking the cash value that's in the policy and reducing the outstanding death benefit to a level that is supported by the cash value that is in the policy. And that creates a paid up policy, guaranteed paid up forever.
Right. So you're basically telling the insurance company, I'm not going to send any more premiums for this.
Correct.
So bring the death benefit down to the lowest possible level that you can as it relates to the death benefit without creating a modified endowment contract. And that's what you'll get. I mean, I'm oversimplifying what's happening mechanically. There's more to it than that, but that's the effect to the policyholder, right?
Basically, I want to be a little careful about the reduction, so it's not a modified endowment contract. There are some cases where that would happen.
Yes. No, I'm just saying in general, your objective would be not to cause that to happen.
Okay.
But yes, there are some cases we've looked at where it absolutely does happen, right?
Yes. So, first three options that we mentioned, the offset, the dividend option, and the premium loan, all three of those options are temporary if you want them to be. So you're not committing to some sort of irrevocable choice. If you choose any of those three options to skip premium payments, doesn't mean that you couldn't decide to do all of them theoretically forever. There's certainly a circumstance that could exist where you choose to stop paying premiums using any of those three options with no intention to ever pay premiums again.
Right.
The last one, the reduced paid up option, that is an irrevocable choice.
Right.
So if you choose to trigger the reduced paid up option on a whole life insurance policy, you cannot decide 3 years later, I got money now, so I want to go back and undo that and start paying premiums again. It's not going to happen. It's not allowed.
Right. You're done with that policy.
Mm-hmm.
Okay.
You should know that if you trigger any of these options, or use any of these options, there's a strong likelihood that you will cause a reduction in outstanding death benefit.
Right.
And I only bring that up because I've been around for a number of years, and the legal department has constantly reminded us of things that we overlook because we don't think they're a big deal, but there might be somebody somewhere who thinks it is. Right. So you should know that if you trigger any of these options or use any of these options, there's a very strong likelihood that you will see a reduction in death benefit. That reduction is going to vary depending on which option you use, but it will happen, or most likely happen. And you can even see what will happen if you make this decision before you ultimately make this decision. There are ways to go to the insurance company and ask them to show you, if I do an offset, what's my death benefit going to be at the end of this next year?
Right.
If I choose the reduced paid up option, what's the death benefit going to be after that?
Right. They'll run those calculations for you.
Yep. So you can know that. The big takeaway from today, though, is to just understand that for the person who owns a whole life insurance policy, who has decided that they either can't or don't want to make premiums right now, they don't have to surrender the policy in a lot of cases. They can use one of these four things that we mentioned, and if they do, they can keep their life insurance policy in force.
Right. Okay.
And I don't know that there's much else that we have to say about it.
Well, great. That's it. So we got our second live broadcast in the books now. If you want to learn more about whole life insurance and you want to learn about the 5 reasons that your clients actually want to buy whole life insurance, or if you're just a person who's looking at whole life insurance and you want to know what are the reasons that someone would actually buy whole life insurance that ironically has little or nothing to do with the death benefit at all, then you should go over to ipblive.com. That's insuranceprobloglive.com, or at least that's what the IPB stands for.
Yeah, don't go to insuranceprobloglive.com.
Don't go to insuranceprobloglive.
That one doesn't really, I mean, yeah.
But no one wants to type that anyway, so that's what I figured. So if you go over to ipblive.com, you can learn all about it. We will be back soon. I'm not sure exactly when our next live broadcast will be. Maybe tomorrow, maybe later in the week, maybe next.
Keep you guessing. I like to keep you guessing.
We're big into planning. So,
but podcast goes live tomorrow, so you should definitely check that out.
Absolutely, the Insurance Pro Blog podcast. If you're not subscribed, go into Apple Podcasts and subscribe to that. You'll be what are we up to? 8 subscribers now, so you'll be like the 9th person.
Yeah,
absolutely. All right, have a great day.